So today I'm going to talk to you about VA refinancing and the funding fee. Now, if you're exempt from the funding fee, you do not have to watch this video. But if you're not exempt from the funding fee, you should totally watch this video. So what happens a lot is you've seen that rates are great. So you call a lender and you're like, hey, I'd love to refinance my VA loan. So in this scenario, let's pretend you already have a VA mortgage. So you call the lender and you say you want to refinance and they go, great, okay, cool. So do you want to take any cash out? And you go, gosh, it'd be really nice to take out a couple $1,000s, pay off a credit card. Yeah, I'd like to take out $4,000 in cash. They go, okay, no problem. Yeah. So that $4,000 is going to cost you a ton of money. Here's why. So when we're talking about VA loans, there's two different types that you're going to look at as a refinance: cash out and the VA interest rate reduction loan. The VA interest rate reduction loan, the fee, the funding fee is 0.5%. Okay? Cash out, 3.6% funding fee. 3.6% funding fee. So if you have a $100,000 house and you want to take out $4,000 to pay off a couple credit cards, you're going to pay $3,600 to take out $4,000. That doesn't make sense. That doesn't make sense. And if you're like, well, but you've got the 0.5% funding fee over here. Well, yeah, okay, that's true. You're going to pay $3,100 to take out $4,000. That is terrible. That is not a good financial decision. And the reason I'm doing this video is because people are not talking, like lenders are not telling people this. They're not saying, hey, wait, that doesn't make any sense. You know, realistically, let's figure out a different plan for the credit cards because this fee is a killer. You know, the only time that fee makes sense is if you're taking out a lot of money, you don't have great credit, you don't have a lot of equity. I mean, it's really tough to justify this fee. The only time I've been able to justify it with a borrower, honestly, is for quality of life. That's it, quality of life, because what they wanted to do would improve their quality of life to an extent. And when we looked at the numbers, it was worth it. But overall, if you're doing a VA refinance, you want to try to stick with the interest rate reduction loan. The beautiful thing about these loans is the funding fee is 0.5, not 3.6. Also, no appraisal, very limited documentation, no income documents needed. I mean, we do verify your still employment, but it is literally a loan designed to lower your interest rate as painlessly as possible. It is a benefit to people who qualify for the VA loan. If you're taking cash out, they're going to whack you. So you want to make sure that if you're already locked with a lender on a VA loan and you're taking out a couple $1,000s, you need to have this conversation with that lender tomorrow, today. Call them now, immediately. And you need to calculate if it makes sense, because if you're taking out if you're paying a fee of $3,600 to take out $4,000, that is the wrong equation. And you may go, well, that's $100,000. It just gets worse because it's going to be 3.6% on any loan amount that we discuss. So it's huge. Now, if you're talking about like, well, I don't have a VA loan right now, but I heard VA rates are so low, because they are. If you talk to the right lender, they're really low. It doesn't always make sense to refinance from a conventional loan into a VA loan. If you have good credit and you have equity in the house, it's going to make more sense to stay in that conventional loan. And the reason is you don't qualify for the VA IRRRL. You have to already have a VA mortgage in order to do the VA interest rate reduction loan. If you don't have one, it's treated as a first use situation and you're going to have that funding fee of 2.3%. So if you have like 50% equity in your house and an 800 credit score, doing that VA loan is going to cost you more money. That's where it doesn't make sense. Now, as you've heard in this video, I've said there's a lot of stuff that costs a lot of money, but VA loans overall are still great. The interest rate reduction loan is such a huge benefit to people. Like, I can't even tell you, like I see numbers change where I'm like, oh my God, you're saving $200, $400, $500 a month and you're not being tormented. It's really just lowering your rate. The fee is 0.5%, but wow, look at the rate. Like, they're good. It's just when we get into the wobbly 3.6 where it gets a little bit more like, you know, VA loans as a whole, great loans, but there's just a couple pockets that you've got to be really cautious about heading into. Because, you know, the thing about a house is you don't have, like, there's certain financial people that would say you need to pay it off as quick as possible. Okay, like, cool, if you want to do that and you can do that, great. But like, my big thing is that a house shouldn't be a burden. It should be a joy. When you drive up to your house, you should be happy and excited. You shouldn't feel like you have a financial weight on you, or that you did something stupid and you kick yourself every time. And I think that's why it's really important that if you are looking at doing a VA refinance, you are working with a lender that knows what they're doing, so they're talking to you about the funding fee differences, but B, you understand the math. You really need someone to do the math with you, especially on these cash outs, to make sure it makes sense. So I hope this has been helpful. If you watch my videos, you know that with VA, rates can differ by over 1.5% on the same loan. I am not kidding. There are some lenders that do not want to do VA business, but they still offer it. And what they do to make it so they don't get too much VA business is they have sky high rates. And a big indicator of that is that if the VA rate is higher than the conventional rate that they're offering, stay away. Stay away. It's not the way it works. VA loans are always going to be lower than conventional. Always. The one exception maybe would be if you're like, oh gosh, who's the Facebook guy? Zuckerberg, right? He got some crazy loan from his bank for 1% because he's crazy rich. That's your exception, okay? So if anyone wanted to make a comment going, what about Mark Zuckerberg? Yes, he did get a better loan than VA. So I hope this has been helpful. If you have questions, please reach out. I'm licensed in 37 states. I love VA loans. Thank you for watching.